Ladies and gentlemen, good day and welcome to Q2 FY26 conference call of Vishal Mega Mart Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Agarwal from Strategic Growth Advisors. Thank you, and over to you.
Thank you. Hi, good afternoon, everyone, and thank you for joining us on Vishal Mega Mart Limited Q2 FY26 earnings conference call. We have with us Mr. Gunender Kapur, MD and CEO, and Mr. Amit Gupta, CFO. I hope everyone got an opportunity to go through our financial results and investor presentation uploaded on the company's website and stock exchanges. We will begin the call with opening remarks from management, following which we will have the forum open for question and answer session. Before we start, I would like to point out that some statement made in today's call may be forward-looking in nature, and the disclaimer to this effect has been included in the earnings presentation shared with you earlier. I would now like to invite Mr. Gunender Kapur, MD and CEO, to give his opening remarks. Thank you, and over to you, sir.
Well, thank you very much, Rahul. Very good afternoon, ladies and gentlemen, and a very warm welcome to this call. What I propose to do is to run you through the Q2 and first half presentation very quickly, so that we can maximize time for questions. So firstly, I'll cover the Q2 performance and then move on to the first half highlights of the performance. In Q2, we did a revenue of 2,981 crores. This was a growth of 22.4% over last year. Our adjusted same-store sales growth was 12.8%. Now, one of the factors which helped the September quarter performance, the Q2 performance, was the fact that we got the benefit of Durga Puja festival, which is, as you know, a very popular festival in Eastern India, and also to a lesser extent the benefit of Chhat Puja, which is again a popular festival in Bihar, East UP, etc. So we got these benefits in September quarter this year, whilst the numbers were reported in December quarter in the last year. So therefore, that incremental revenue, we got it in September quarter this year, and we will not get it in December quarter this year. Whereas last year, there was no benefit of these festivals in September quarter, and all the benefit was reported in December quarter. Moving on to EBITDA, the EBITDA for the quarter was 395 crores, which is a 30.5% growth over last year, and the EBITDA margin improved to 13.2% vis-a-vis 12.4% last year. PAT was 152 crores, which is a 46.5% growth over last year, and the PAT margin this quarter was 5.1%. In the corresponding quarter last year, it was 4.3%. Here we conclude the Q2 performance highlights, and now I will move on to the first half performance highlights. In the first half of FY26, our revenue from operations was 6,122 crores. This was a growth of 12.6% over last year, and our adjusted same-store sales growth was 12.1%.
Our growth was 21.6%.
Sorry, thanks, Amit. We had a growth of 21.6%, and the same-store sales growth was 12.1%. So in the first half, 6,122 crores revenue, a growth of 21.6% over last year, and adjusted same-store sales growth 12.1%. The EBITDA in first half was 854 crores, which is a 27.8% growth over last year, and an EBITDA margin of 13.9% in first half, as against 13.3% last year. The PAT in first half was 358 crores, which is a 41% growth over last year. And the PAT margin in the first half of this year was 5.9%, vis-a-vis 5% last year. We maintained our accelerated new store opening momentum and opened 28 new stores over this quarter. And overall, for the first half, we opened 51 new stores. This takes the total store count to 742 as on September 25 end, and we have now presence in 493 cities in India. We added 19 new cities in the second quarter, in line with our agenda of deeper penetration into India and coverage of the white spaces, which are still there. Our trading area stood at 1.28 crore square feet. As you know, own brands are a very important part of our strategy. The revenue in the first half of the year from own brands was 74.7%, which is a 185 bps improvement YOY. The category mix remained essentially the same. Our quick commerce expanded to 695 stores across 460 cities in the country, and the registered users on quick commerce have increased to 1.08 crore people. Finally, to conclude, I would just add that we believe the government's initiative of GST rate rationalization is a very positive step towards stimulating consumption, and Vishal remains totally committed to pass these benefits to all our customers to enable long-term inclusive growth for all the stakeholders. Well, with this, I would like to thank you once again, and I would request the moderator to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Vivek M. from Jefferies. Please go ahead.
Hi, GK and Amit.
Hi, Vivek.
Hi, sir. My first question is on the SSS numbers. Now, obviously, we have data only since the time you got listed and period around that, which has been double digit. I know this question was asked to you last quarter also, but instead of, let's say second half FY26, if you take a, let's say 2-3 year view, where do you think this number, let's say, settles at, let's say in 2 years from now on the SSS side?
So Vivek, firstly, thank you very much for your question, and it's great to speak to you again. But as you know, we do not give any forward-looking guidance at all. All I would say at this point in time, we are optimistic about the future because there is a very happy confluence of 3 factors which is going to play out. One is, of course, the GST rationalization, which I spoke about. The second is, as you know, the income tax rates for the middle income group customers were rationalized on 1st of April. And last but not the least, while I'm not an agri expert, but from what I've read or heard, since the rainfall for Kharif this year has been very good and somewhat extended, as you know, we should expect a good crop. So at this point in time, there is really no reason for us to be not optimistic about the future. Of course, any macro events which are based more on global rather than local events cannot be totally ruled out. So yeah, with that caveat, I would say that we are optimistic about the period that you spoke about.
I see. Okay. And second, on the GST bit, GK, so I understand the part as from a retailer standpoint, but what happens on the own? So what have you done on the own label side, number one? And number two, the low GST will make you more, competitive versus, let's say, the regional and the local brands in each of these markets. Is the second part of, my point, do you concur with that? So both sides, what have you done with the lower GST in the own labels and the second part?
So firstly, Vivek, on the GST on third-party brands and on own brands is all entirely being passed on to customers to the extent of the GST reduction. So we are not differentiating between the two. 100% of the rationalization benefits are being passed on. On your second consumption, the view that I can share with you with certainty is that it is likely to have a positive impact on consumption. Now, how specifically will it play out vis-a-vis smaller regional players? I don't have a view right now because I don't have really the granular data for each one of them to see. My assumption is that they would all be passing on the GST benefits to the consumers and customers. If that hypothesis is true, then the relative price parity will remain essentially the same. But consumption will have a positive impact. That I can say.
I see. Okay. And last question, if I may, which is basically on the first half, adjusted EBITDA margins are almost about 9.5%. And I'm talking about pre-ESOP charge. What is your outlook, let's say, over the next 12, 18 months on pre-Ind margins? At what level, you want to cap it to?
Okay. So, Vivek, I'll give a holistic answer to this question. If you recall, right from the IPO time, we've been saying that the game plan for this business is to maintain the gross margins. And that essentially continues to be our opinion and view. So I do not either commit to or in any which way forecast that the margin improvements that we've seen thus far will necessarily continue in the future. And I hope that, Vivek, answers your question. We are committed to ensuring that we, as we grow, and our growth is largely volume growth, we get better and better buying efficiencies. And the margins which may come because of better buying efficiencies, we have a plan to reinvest that either in product quality or in better pricing.
Got it. That's good to know. Wishing you and your team all the very best, CK and Namas.
Thank you very much, Vivek.
We'll take our next question from the line of Gaurav Jogani from JM Financial. Please go ahead.
Thank you for taking my question, sir, and congratulations on a great set of numbers. So you did highlight, that Q2 was partially benefited because of an early festive of Durga Puja and Chhath. But we also gathered that, there was some regional disturbances in the Assam region. And given, Assam has a very decent contribution to your overall growth. So would that also had some offsetting negative impact during the quarter?
Absolutely correct. So we had two things in the quarter which were significant. One is that we had the somewhat or quite significantly extended monsoons this year. And they did cause some disruption, which would inevitably impact the retail businesses. So that was one factor. The second, as you said, because of the very, very unfortunate passing away of the favorite singer for all of us, Rubin Garg, there was a 5-day mourning period in Assam where everything was shut. and that came bang in the middle of the peak Durga Puja season. So yes, you're absolutely right. That did have an impact on the revenue.
So would you like to quantify the impact of this, especially the Assam thing, if any? Would?
Very, very difficult to quantify that specifically. I can say that it was significant in Assam. You see, because one cannot assume that the revenue that we lost in those 5 days is all a net loss, because in several cases, the customers would go and in the subsequent week buy all that they were supposed to buy or all that they wanted to buy. So unless one engages with a very, very large cross-section of customers to figure out if there was any reduction in their purchases because of that 5-day shutdown, very difficult to speculate on that.
Sure. And sir, my second and last question is with regards to the store expansion. I mean, store expansion is as per, what you have been guiding. But we have seen, the expansion is largely in the southern market because out of the 20 odd stores opened during the quarter, a large part of it was opened in the southern market. So any specific focus, and we are also seeing a commensurate increase in the, decline in the average square footage of the stores as well. So anything that you would like to highlight here?
Certainly. So firstly, I would say that your observation is correct. That we've opened significant number of stores in the southern region. Firstly, as I mentioned in the last quarter call, we are getting a very good response from Kerala, which is one of the states that was mentioned. And of our total store openings,
28 for the quarter, 4 came from
Four came from Kerala, 3 came from Karnataka, which is an existing market for us,
Telangana.
4 came from Telangana, and 2 came from Andhra Pradesh. So the total was 15 stores. But the rest of the stores were opened in the north and some in the west. As you know, we are also piloting Gujarat and Maharashtra. So there were store openings in Gujarat in the quarter, and that will continue to happen. So your observation is absolutely right. But in second quarter, 15 out of 28 stores opened in South, 13 opened in the rest of the country as well.
Sure. So, I mean,
Gaurav, I'm sorry to interrupt. I request you to join back the queue, please, as we have other participants waiting for their turn.
Sure.
Thank you. We'll take our next question from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Hi, sir. Good afternoon. Thanks for taking my question. Congratulations on the strong performance. Sir, I wanted to check, there is a GST reduction that has happened, and you have indicated that consumption should see a pickup. So you did indicate that your average bill size pre this reduction was about 800 rupees. So wanted to check, are we sort of sustaining at that level, or because of this GST reduction, there is some level of reduction that has happened? The intent of asking this question is whether we have been able to sort of impress consumers to sort of spend more at the stores, or consumers are sort of spending or taking the benefit of GST reduction with themselves.
So what I would say, firstly, it's too early to, with data, come to that conclusion. Just as yet, because as you know, there was a transition period of 3-4 weeks before everything settled. But my assumption at this moment is that it would not impact our average bill value at all, because I'm also quite optimistic that this will lead to an increase in overall consumption. So we anticipate one of the two scenarios, and most likely both will play out with different customers. One is folks who are going to buy more things from the store. So earlier, if they were buying 8 items per bill, they could buy 9, for example. The second thing also, which will inevitably happen, is that folks who are desirous of buying a more aspirational, higher price point product may find that it's become somewhat more affordable right now. So as a combination of the two, it is not our hypothesis that the average bill value will come down. But we will have in the next 3 months enough data to answer that with specificity.
Understood. And over on the portfolio level, sir, what is the GST reduction? Any quantifiable numbers that you can suggest?
So it's, as you know, it's very different for different categories. In apparel, our only 1% of our revenue is impacted because, as you know, all products which are more than 1,000 rupees earlier were paying higher GST. That has been reduced to 2,500. So our products which are between 1,000 and 2,500 rupees, which is a very small part of our revenue,
Right.
the GST reduced from 5%, from 12% to 5%. That number is significantly higher for general merchandise, where almost 34% of our revenue is positively impacted by GST reduction. And this includes categories like footwear, household, appliances, sports and toys, where the GST has moved to 5% from a range of 12 to 18%. And lastly, the largest impact would be on FMCG, where 50% of our FMCG revenue would be positively impacted by the GST reduction. So, as you can see, it's 1% in apparel, but 50% in FMCG. And in general merchandise, it's about 34% of our revenue.
Understood. Lastly, I wanted to understand, there are 2 new additions to your board. There is some reconstitution that has happened. So, if you can highlight what is the strategic intent behind this, that's my last question.
So we have, in the period, slightly longer period, we've had 3 wonderful additions to our board. As you know, Neha Bansal is our chairperson, and we've had the privilege of having Soumya also as our independent director. And I think as we announced yesterday with the results, we also have now Mr. Yogesh Yadav, who is another very welcome addition as an independent director to our board.
And from partners,
I'm sorry to interrupt. May I request you to join back the queue, please? Thank you.
Sure.
Thank you. Before we take the next question, would like to remind participants to ask a question, please press star and 1 on your phone. Next question is from the line of Garima Mishra from Kotak Securities. Please go ahead.
Thank you so much for the opportunity. First question, GK, you've mentioned in the press release that a large proportion of your stores offer the quick commerce service, right? Can you give some color on revenue contribution from e-commerce, quick commerce to your overall revenue pie?
Well, I can tell you the range because, as you know, all the stores are still not covered and they are getting added every month. So the period for which they've been operational varies from a few weeks to more than a year. But the range falls almost between, at the lower extreme, 1.5 or thereabouts % of our revenue, and at the higher end, 9% plus of our revenue. So that's the range in which we are operating. And once we are fully rolled out and matured in all the stores, which have all been recently added, we would have a better overall number for this. But I mean, that's the range, and I would say 9% plus in such a short period is a pleasant surprise for us. But we are indeed getting even that much in some parts of the country. I wouldn't say majority of the country, but in a significant part of our revenue.
Got it. And just to follow up on this one, so these revenues are attributable to individual stores and would thus be forming a part of the LFL calculation, right?
Absolutely. You're absolutely right. These are attributed to the stores and therefore do part of the total revenue numbers that we are reporting. Can I just make one clarification on the prior question, please? Because I understood the question as independent directors. If I were to extend that to directors who are there from my investor side, there is the addition of Mr. Vagesh Gupta from Partners Group to the board also. So the three folks I spoke about earlier were the independent directors, and Vagesh represents Partners Group on the board. Sorry, that's the comprehensive answer to the earlier question.
Got it. And I have one more question. Would you talk about any specific supply chain investments that the business might need? We've seen, once in the past there was a little bit of one-time investment that you needed to build up supply chain. Is there anything in the offing in the next couple of years that we should be looking out for?
Absolutely. There will be further investments in the supply chain. I think I had mentioned in one of the earlier calls that we are making a 600,000 square feet warehouse in Haryana, close to Gurgaon, and this would be a fully automated warehouse to ensure that we are not running out of warehousing capacity for our future growth. So as that gets fully implemented, we would be putting up similar warehouses, but depending on the revenue in that particular zone, maybe of somewhat different sizes, in a very strategic fashion around the country.
And any quantity?
Garima, I request you to join back the queue, please. Garima, as there are other participants waiting for their turn. Thank you. We'll take our next question from the line of Nihal Mahesh Shyam from HSBC. Please go ahead.
Yes, good afternoon, Gunindra and Amit. I have two questions. The first is, while you mentioned the adjusted SSG looking at some store closures and cannibalizations, just if you could quantify the impact of the shift in festive of Chhat as well as Durga Puja into this quarter. Had that not changed into the Q2 quarter, what could have been the ideal normal SSG?
See, I'll give you my best estimate, and it'll be an approximate number because when the festival dates change, at this time of the year, the seasonality impact also changes. So, for example, if Durga Puja and Chhat are later than last year, then the winter sales also come into play. Likewise, the other way around also. So it is very, very difficult to be that specific. But if you ask me for my best estimate, I would say it is probably 150 to 200 basis points.
That is helpful, GK. The second question was on, specifically the 99 price point in apparel. Would it be fair to say that, at least anecdotally, looking at a lot of the other retailers that operate in your area, that you sort of have an exclusivity or very large market share in that price point? If that is a correct inference. And given recently, if you look at the fact that there has been an increase in aggression from the likes of Meesho, where you do find a lot of listings less than 99 also. So how do we plan to differentiate ourselves versus, say, cheaper pricing of 50, 60? Is it that the quality improvement that you're speaking of is more at the starting price point in the apparel, or will it be across the board? These two parts and I'll be done.
So, firstly, it will be across the board. Secondly, I would like to just add one piece of information to complete the picture. The most fashionable, highest price points are growing the fastest. And if you were to rank them, the middle price points are growing the second fastest, both significantly faster than our entry price point. These are the price points where we've completely enhanced the fashionability and quality. And that agenda you will see unfolding further in spring-summer 26 with, for example, things like higher cotton content, etc. In our apparel clothing, even at the lower price points. So yes, that's correct. Equally, it is correct that we have price points lower than 99 already in the business, and these are largely in kids infant and other kids clothing. So those price points which are less than 99 already exist with us, and we will continue to ensure that A, on quality, and secondly on pricing, we are very competitive.
Just one follow-up there, that in the entry price point, if you see, say, certain online competitors getting very aggressive with pricing and quality, then what approach do we plan to take, or is it that we are confident with the current approach at this point in time?
So we have certain principles which we've been articulating, and I think I can say that those would be carried forward in the future also. On the opening price point, we will be the most competitive in the country. Now, I must clarify vis-a-vis all the organized sector retail, because the mom and pop stores, it's impossible for us to monitor anything because there's so many, as you probably know, millions. So in the organized retail, we will be the most competitive in terms of opening price point, which can be easily compared across retail. Beyond that, I would further say that I remain confident that if the inflation situation remains as benign as it is right now, with that caveat, we have no plans for price increases, but we will continue to upgrade our merchandise and keep introducing new and more aspirational products beyond our current price range on the higher side.
Helpful, GK. Thank you so much.
Thank you. Next question is from the line of Sagar Tanna from Alchemy Ventures. Please go ahead.
Hi, sir. At the start of the conversation, you mentioned about consumption likely to pick up thanks to GST income tax rates, and you also mentioned about upgrading our inventory to aspirational. Is it fair to assume that you see demand consumption coming back strongly over the next few years compared to the last few years, and there would be some kind of uptrading versus downtrading which may have happened? And if yes, then how will it impact our private label business?
Okay. So, firstly, I would like to say that the price benefit that our private brands offer over the third-party brands are very significant. They could be in the range of 20 to 45, 50%. Obviously different for different private brands. The GST impact is relatively much smaller, the GST benefit. So I'm not certain whether the competitiveness of our private brands will get impacted at all. Secondly, as I mentioned in one of my earlier answers, we have even on our private brands passed on the GST benefits. So I can assure you that there is likely to be no change in the competitiveness of our private brands vis-a-vis the third-party brands because of the impact of GST or increased consumption. In fact, I would believe that given their immensely higher affordability, our private brands will participate very strongly if the consumption were to go up in that upgradation process.
Got it. And sir, any changes with respect to our capex plans, considering that consumption is likely to be more stronger than in the last few years?
So I will just reconfirm that we are going to be investing in supply chain, as I mentioned in one of the earlier answers. Secondly, I reconfirm that our agenda will remain accelerated store openings. Thirdly, our agenda will remain to cover the white spaces which we still have. For example, I spoke about Kerala, I spoke about Gujarat, I spoke about Maharashtra, and there is another state where we are not present at the moment, which is Tamil Nadu. And last but not the least, as you know, we are expanding our omni-channel presence, and we will continue to invest behind that. I had also mentioned in one of the earlier calls that we are piloting a format for the smaller towns, which are ballpark 50,000 population. That pilot is also progressing well, and we will scale up that as well. So, lastly, I would just like to assure you that we have enough cash on the balance sheet to fund all these plans.
Got it. Thank you and all the best, sir.
Thank you very much.
Thank you. Next question is from the line of Aditya Bansal from Motilal Oswal. Please go ahead.
Hi. Yes, thanks for taking my question. My first question is on the initial traction in Gujarat and Kerala. I see you have ramped up store additions there. So how has been the traction in those states, especially on the private label FMCG?
Okay. So, let me specifically say that in Kerala, we are more mature than Gujarat and Maharashtra, in fact. So, as we speak, we have 16 stores fully operational in Kerala and a pipeline which is more than 60 of stores which are going to be opened soon. In Gujarat and Maharashtra, our experience has been rather limited at this point in time, but nonetheless, the early signs are very positive. And based on that, we are already expanding beyond the pilot stores in both these states. So, for example, quarter 2, which we just finished, we've added 2 new stores in Gujarat, in addition to the one that we had opened earlier. And in Maharashtra, we have added 1 more store to the one that we had put up in pilot. So we have a store in, I could be somewhat incorrect here, but I'm quite sure it's the right name. We have a store in Talegaon also in Maharashtra, in addition to the pilot store that we had opened in Pune. So as you can see, we are getting more confidence, and we are fine-tuning our format, the store size, and the merchandise, etc. But we are cautiously optimistic, and that is giving us enough confidence to add more and more stores to both these states.
Thank you. The other question was on the divergence between SSG and the adjusted SSG. That has increased during this quarter. Like, what would be the reasons for the same?
So, that is to adjust for the impact of a few things. One is the stores which we've had to close, right? So they are removed from the base then. And that impact is removed because it's like-for-like comparison. The second thing is that every quarter, it is our agenda to, at the same time, refurbish more number of our stores. Because our stores require refurbishment 4 to 5 years after opening to ensure that they remain aspirational and relevant for our customers. So that impact is also removed from the numbers. And the last piece is that we right-size many stores, which is to say that it was earlier 25,000 square feet, and now we have found that actually what we need is 18,000 square feet after a few quarters of watching revenue. So that impact is also included in these numbers. So the 3 impacts which are included is stores closed, stores which are shut for refurbishment, and the stores which have been downsized.
And so cannibalization.
So that is the delta between pure like-for-like sales and adjusted like-for-like sales. So it's nothing beyond these kind of things.
Thank you, and all the best.
Thank you very much.
Thank you. Next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
Hi, GK and Amit. Good morning. I had only one clarification on the quick commerce bit. In your data analysis, what are you finding? Is it new consumers coming in? I know that you will mix of new versus the current set of consumers, but some color on, let's say, the new customer or new consumer recruitment here.
Well, absolutely. Firstly, good to speak to you again, Manoj. Our data suggests at this point in time, with the caveat that, in some cities we are there for long and in some cities we've just recently entered, about 20% of our e-commerce customers are coming to the Vishal franchise for the first time through the e-commerce route. So that has been, as you can imagine, a very pleasing outcome for us, because e-commerce is helping us add new customers to our franchise. And while I do not have database profile of these folks, my assumption is that these are the more relatively younger customers, because e-commerce fits into their lifestyle much better than offline stores.
Interesting. And that's excellent outcome, maybe at a much lower customer acquisition cost, actually. The second one, if I may, I heard about the pleasing comments about the TAM expansion, particularly in some of the southern states, etc. Any qualitative color subject to obviously confidentiality and, maybe not putting in the public domain. Any qualitative color which you can tell about the tweaks which you have done, the learnings, etc., which kind of would indicate, maybe there is faster growth possible in this newer geography.
So, Manoj, just help me. Can you just repeat the question, because I lost a few seconds in between.
No, I was asking what, subject to whatever you can disclose the public domain, just trying to understand, let's say, the newfound confidence, if I can use that word, let's say, in expanding faster in Kerala. What are the tweaks you have done? What are those experiments? And it seems that finally you have arrived at the right marketing model here.
So, yeah, very happy to answer that question, Manoj. The biggest difference that we made is to our store size. Because in Kerala, as is well known, but we sort of rediscovered that Kerala is a contiguous state. There is, the population and the catchment and the residential and the commercial places never end. It's just continuous. Unlike some other parts of the country where you exit a city and you reach the other city after 1 hour, 1.5 hours or whatever. Now, therefore, in our attempt to be closer to the customers all the time, and for their convenience, we are probably going to open more number of stores than earlier planned, closer to our customers, but of a smaller size. So yeah, that's been the fine-tuning that we've done. And secondly, but not surprisingly, we are finding very, very good response to both our fast fashion offerings and to our private brands in Kerala.
Understood. Thank you so much and all the best, and touch base separately, sir.
Thank you very much, Manoj.
Thank you. Next question is from the line of Prerna Junjunwala from Elara Securities. Please go ahead.
Thank you for the opportunity and congratulations on the set of results, sir. Just wanted to understand the revenue mix category-wise. Is there any effort being taken to improve the revenue mix in any of the categories, or we are comfortable with this mix that is there in the system right now?
Okay. So, thank you, Prerna. Right from the IPO time, we've been saying that our category mix is optimized, and it would remain by and large the same. And as you may have seen in the various quarters, with some up and down based on either the seasonality or the impact of festivals, the revenue mix goes up a little or comes down a little in favor of something or the other. But our intent is, and our view is that it will largely remain constant.
Okay. And the revenue share from the own brands, the thought remains the same, that it should be near these levels?
So our endeavor would be to keep increasing it, but at a pace which is obviously much slower than what we had when the revenue contribution was, let's say, 30, 40, 50%. Simply because of the fact that now the private brands contribute 74-75% to our revenue. So our endeavor is to make sure that it keeps going up, even if it is at a smaller pace, lesser pace.
Understood. My second question is on CapEx. You alluded CapEx on supply chain, and there will be CapEx on store as well. Could you help us with some clarity on how much should we look forward that you will be spending on each of these categories in FY26 and 27?
So, Prerna, my apologies, I won't be able to share any specific numbers with you. But the general principle and what we are proposing to do as a plan, I've articulated in response to an earlier question. And if you wish for me to repeat that, I'm very happy to do that.
No, not required to repeat the earlier ones. No problem. If you cannot give me a number, no problem. Third question on our plan, ESOP expenses. They have been coming down. Do you think that they will come down further with time, or this is the expense that will continue for some time, given the layouts in the system? Just wanted to understand the ESOP expense, since you've been categorically mentioning about it in the presentation.
So, as you know, it's impossible to be totally accurate on that one, because we have employees who get promoted and new employees who come and who are entitled to ESOPs, etc. But to give some color to you on your question, I can invite Amit to speak on that in a more generic sense. Amit, all yours.
Yeah. So, Prerna, as you heard from GK, as far as the existing cost is concerned, that will keep coming down depending upon the phasing. But as GK also said, that we can't comment on the future expenses on ESOPs.
So thank you. Thank you so much, and all the best.
Thank you. Next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. Congratulations and thanks for the opportunity. Sir, on quick commerce side, if you can give little more color about the aspiration, what size of, quick commerce, expanding to various geography, and what size of, we anticipate sales through quick commerce of overall, and how the pricing is different from the in-store and through quick store, or if you give ROCE is different because of same capital cost, without any additional capital cost, we can do business.
Okay, so I can just give you some color that we are fully aware of at this moment. Firstly, our revenue profile in a town quite directly depends on the number of players in quick commerce in that particular city. So I can say it's generally speaking true that where we have less number of players, our contribution from quick commerce to the overall store revenue is higher. So that we have a number of stores now which are both in small towns and large towns to be able to say that. Secondly, it's true that our FMCG contribution in quick commerce is significantly higher than what it is in the stores. right?
Correct.
So as you know, in the stores, our FMCG contribution is about 27-28%, whereas in quick commerce, not surprisingly, our FMCG contribution is north of 70%. So the dominant contribution is from FMCG. Thirdly, based on the second point, I can state that our gross margin is therefore lower than the store gross margin because of the higher contribution of FMCG. The fourth thing I would tell you is that there is an additional delivery cost associated with delivery in quick commerce, which is incremental to the store, totally incremental to the store. And last but not the least, we are very excited to note that specifically in FMCG, our contribution of private brands to our total revenue is higher than what it is in the physical stores. So the traction for private brands is even higher amongst our quick commerce customers compared to what it is in offline retail. So these are the 5 things which I can specifically mention to you because we have observed that over the last 1 year.
Great. And sir, has it been calculated, this quick commerce sales in SSG growth number, if you can clarify?
So our growth has been very, very strong double digit in terms of SSG in quick commerce. But all those numbers are included in our overall growth numbers. So it is just a subset of that. It is not incremental to that.
Okay, last question, sir. You in initial opening remark, you stated that we are looking to grow the stores, smaller size store in 50,000 kind of a town, tier 2, tier 3, tier 4. So if you can give what level, has we started pilot and how do we look at, or which geography are we looking and how different SKU will it have?
So we have indeed started a fairly, now at this stage, with new store additions in that format, a fairly extensive pilot. We have 9 stores in pilot today in the small format, and the more number of stores would be added this quarter also. And since we are adding stores, I can say that obviously we are feeling more and more confident about that format.
Okay.
Thank you.
Thank
Bharat,
you.
I request you to join back the queue, please.
Sure. Thank you.
We'll take our next question from the line of Percy Panthaki from IIFL Securities. Please go ahead.
Hi, GK, Amit and team. Good afternoon.
Good afternoon.
I just had a couple of questions. One is on the margin. So in response to an earlier question, you had mentioned that the endeavor is to keep the gross margin constant and any further gains you will reinvest in the business. My question is that you will get some operating leverage benefits below the gross margin. So will you reinvest that also, or that could actually result in some EBITDA margin increase going ahead?
So, Percy, my comment was specific to gross margins, not to the EBITDA margin. We will inevitably, with higher growth, get the benefit of EBITDA margin improvement in our P&L.
Got it. Secondly, just wanted to understand your success on SSSG a little better. You have consistently delivered double-digit SSSG in an environment where almost every other retailer is struggling for growth. And also, on an absolute basis, if you look at the growth in consumption spends or economy, one would expect that a normal SSSG level for any company would be, let's say, a 5 to 7% kind of SSSG. And you are clocking clearly above that. So that means that there must be certain specific drivers for this high SSSG, which probably remain for a few years but can't remain forever. So my question is, can you call out what these drivers are, both in absolute terms and what you're doing different versus the other retailers? And also, how long of a runway do you have before the SSG normalizes to a mid-single digit kind of a level?
Well, the last part of your question is something which I would hope that it doesn't happen. And at least it doesn't happen in the time frame that we can speak about, Percy. So let me answer that first, because as you know, organized retail is a very small part of the total consumption in the country. The dominant consumption is still with mom and pop stores. And the second piece is that there are a very significant number of Indians who are still not a consuming class. They are still out of the consumption bracket. And so that scenario is something that we are not building into our plans just as yet, given the opportunity for growth. In response to your other question, what is it that we are doing? Let me add some specificity to that so that it's helpful. See, our same-store sales growth is driven by three factors, and I can tell you what relatively how they are playing out at the moment. One is new customers and customers who are buying more number of items, which leads to volume growth. You would notice that a very large part of our growth today is coming from volume growth, right? So it's driven by volume growth. The second part of our growth would come from people who are upgrading to higher price points. As I mentioned in my earlier comments, that we are specifically adding significantly more fashionable or better merchandise at beyond the highest price point that we have currently across the board to facilitate the upgradation of our customers to higher price point and better products. So we are seeing some significantly smaller impact of that also in our growth. And the third element could be the upgradation from either mom and pop stores or indeed from folks who are not even in the consuming class at the moment. And I have during the last 45 minutes or so underlined the fact that our commitment to competitiveness and relevance of opening price points would not get diluted. And both that commitment and investment in pricing is to drive or to facilitate people from upgrading to Vishal from either mom and pop stores or not even from the consumer. So that's the sort of framework, Percy, and I've added some color to that vis-a-vis the current context to provide a comprehensive response to your question.
Got it. Can I squeeze in one more quick question?
It's the lady's decision. I'm not the one who decides. Percy.
Of course, Percy, you can ask.
Yeah. Okay. So, are we, is the board or anyone actively looking for your successor, GK, or that is still a few quarters away, that process?
See, let me answer the second part first. My sense is that I'm going to be here for foreseeable future, and it will entirely depend on the decision of the board, obviously. But I can, from my side, give you reassurance that I wish to be around, right? So there is no, the time plan is something which the board decides, and it's entirely the board's decision. My commitment more means that I will continue to support this company in whichever way I can into the future. So that is my view. The second thing I would say is that I think the board is continuously looking for possible potential successors, both from outside and inside the company. That is a process which our board follows all the time.
Got it. Thanks for all your answers.
Thank you. Ladies and gentlemen, due to time constraints, we'll take that as the last question for today. I now hand the conference over to Mr. Guninder Kapoor for closing comments. Over to you, sir.
Well, once again, thank you very much, everyone, for being interested in Vishal and participating in this call. I deeply appreciate that. And I wish you all the very best because to you and your families, because I'm aware of the fact that I could speak and all of us could speak only in the next year now. So my best wishes to you and your loved ones. And once again, thank you very much.
Thank you, sir. On behalf of Vishal Mega Mart Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.